The Australian Financial
It was
Review.
always going to be an eventful day for Virgin Airlines as it returned to the stock market on Tuesday. But no one predicted it would be this dramatic.
Israel's defense minister has acknowledged that they have carried out strikes against Iran, the first time in months that
Iran
we've seen
fired two waves of missiles overnight towards Israel.
The United States has dramatically entered Israel's war against Iran.
News of the temporary closure of Qatari airspace threatened to overshadow Virgin's float.
In the days leading up to its listing, Israel and Iran traded missiles and the US entered the fray. The prospect of a broader conflict and a spike in fuel prices was not good news for the airline industry. But then suddenly on Tuesday, the conflict de-escalated and there was talk of a ceasefire, just in time for a relieved Virgin CEO Dave Emerson to ring the bell.
2, 1. Investors are buying Virgin shares today as the airline goes public in one of the most hotly anticipated floats.
In a strong result, Virgin's shares jumped 11% on the first day of trading. But now the airline must stay on track and ensure history doesn't repeat.
There's just something about airlines, there's something about aviation executives. It's so tempting for these guys to expand and try and compete with the likes of Qantas.
Welcome to The Fin. I'm Lisa Murray. This week, senior reporter Aisha de Kretser and Chanticleer columnist Anthony McDonald on Virgin's way back to the market, why it could struggle to stay in its lane, and whether Australia can ever sustain more than two airlines. It's Thursday, June 26. Hi Aisha, hi Ant. Thanks for coming on the podcast.
Thanks for having us, Lisa.
Thanks, Lisa.
And when a company lists on the ASX, it's usually an exciting day. But Virgin's IPO was particularly dramatic on Tuesday. Its executives were up in the early hours of the morning dealing with the diversion of flights following Iran's decision to launch missiles at a US base in Qatar. But the day ended well. How would you rate Virgin's return to the market?
Lisa, this was in the hands of the gods, and the gods smiled. so much could have gone wrong. Like, Virgin did well to raise at $685 million for its IPO, but that was 3 weeks ago, Lisa. Like, so much has happened in the past 3 weeks. So much that could have really impacted investor sentiment and how it would trade on listing. You know, you had Israel and Iran, then the US bombing Iran, the oil price spike over the weekend, the threat of retaliation strikes. Like, at worst, it could have sunk the float, Lisa. Like, Bain might have had to have pulled this float. I mean, at best, you would have thought it would scare off some investors and the stock would trade down. But almost miraculously, the whole thing calmed down Monday night in the US, right ahead of the listing on Tuesday morning Australian time. Trump was even talking about a ceasefire in the Middle East, which is something that we certainly didn't see coming. And by midday, when it was time to list, the market's mood was risk on. Investors were keen to buy stocks and Virgin landed in smooth markets. It opened up 7.5% and held those gains for most of its first day. Now, in normal times, Lisa, you'd say that's a solid debut. Like, it's nothing miraculous. But given what the market conditions were like, given what's been happening in the Middle East, you'd say it's a remarkable debut.
And before we get to what happens next, take us back to mid-2000 when the airline launched as Virgin Blue in a marketing blitz led by Richard Branson. How did Virgin secure its place in the Australian aviation market?
They launched with a mystery flight to Maroochydore, of all places. At the time, it was called Virgin Blue because its first planes were red, and bluey is the Australian slang for redhead. Now, Lisa, it started services in August 2000 in the lead up to the Sydney Olympics. Set up by Branson and Brett Godfrey, based in Brisbane as a low-cost carrier. At first, it had only 2 planes, but then in September 2001...
When the last flight touched down in Sydney this morning, Ansett passed into aviation history.
Ansett Australia, which was the number 2 airline in Australia, it collapsed. And Virgin all of a sudden became the second biggest airline. Now, some say Virgin contributed to the collapse of Ansett because it had turned down an offer from Singapore Airlines and Ansett to buy Virgin. And Branson, he actually called a press conference pretending he'd accepted the deal.
Anyway, I'm off to England with my $250 million cheque, and thank you very much.
Before announcing he was only joking and ripped up the cheque.
I'm just joking.
Its pitch was that it was younger, funner and less expensive than Qantas. It did widespread marketing.
Well, Richard Branson will launch an assault on the Australian domestic travel market this morning, rebranding Virgin Blue as Virgin Australia.
But the big sort of change came in 2011 when it rebranded as Virgin Australia.
What we're building here is an airline that still has very competitive airfares, but is also very competitive at the front end of the aircraft.
To try and move the company on from its low-cost Virgin Blue routes, it became a more full-service airline and started targeting business flyers.
Virgin Australia has a new strategy in its rivalry with Qantas. It's unveiled a luxury aircraft for use on domestic routes.
Now, in 2014, Virgin bought Tiger Airways, an airline you might remember. Now, it was sort of copying Qantas, which had launched Jetstar as a low-cost carrier to try and keep Virgin Blue out of the market. And Virgin at the time was run by a guy called John Borghetti.
There is an alternative now, and it is for the first time in over a decade, in fact since Ansett stopped flying, that you have two carriers now that can service all elements of the market.
It was trying to take on Qantas. It was spending lots of money on lounges, furniture, business class flights, all this costly sort of premium stuff. And that's because there was a bit of rivalry between Borghetti and Alan Joyce, who was running Qantas.
Virgin Chief Executive John Borghetti took over Virgin after being passed over for the top job at Qantas 3 years ago.
They both worked at Qantas. Joyce had won the CEO spot and Borghetti went to Virgin and he decided to take them on.
John Borghetti, how satisfying is it to get this job, given you missed out on the CEO role at Qantas?
I think this job is an incredible opportunity and one that I'm looking forward to very much, irrespective of any other job.
As part of it, Virgin built a frequent flyer business called Velocity. At one stage, it even sold a stake in it to private equity and then bought that stake back using a lot of debt.
Closed borders and grounded planes. The coronavirus pandemic has the airline industry facing the worst crisis in its history.
So by the time the pandemic struck in early 2020, Virgin all of a sudden had lots of debt, its planes weren't in the sky, and the whole thing went into administration.
Aisha, all airlines were grounded by COVID. Why was Virgin affected more than other airlines, and how did it manage to turn the business around?
So I think, as Ant mentioned, it just had too much debt. More than $5 billion had been racked up, and I think the recriminations can fly over who acquired all of that debt and on what and whether it was useful. Some people would say that chasing Qantas and trying to be premium was a good strategy. Others would say buying the stake in Velocity back at the wrong time meant that Virgin tipped into administration. So people can kind of argue over what was the straw that broke the camel's back. But I think what we can say is that the foreign shareholders that sat on Virgin's register, which were Singapore Airlines, Etihad, China's Nanshan Group, all owned about 20% each. And they sort of weren't the most useful of shareholders because all state-owned. They didn't have necessarily shareholder profits at the heart of what they did, and they all had a different strategic plan for Virgin. The airline had to temporarily stand down about 8,000 of its workers while borders were shut during that pandemic.
Virgin grounded. 8,000 people now out of work.
It is what it is, darling. It is what it is. We're all in this together. There's nothing we can do.
Paul Scurrah, the CEO who did buy back that stake in Velocity, he'd asked the government, Morrison government, for a $1.4 billion loan.
There was an enormous amount of effort, Peter, to try and get the support from the federal government. Look, it was their decision and we respect that decision. Because of the effort we put in, it felt a little bit disappointing.
But there was a bit of lobbying behind the scenes by a number of players, including Qantas. And ultimately, Scott Morrison and Josh Frydenberg, who was the treasurer at the time, they went for a market-based solution that was proposed by Nicholas Moore, the former CEO of Macquarie, who said that actually allowing the airline to tip into administration was a better kind of option, and letting the market find a solution. So very much the imperative from Moore and others at the time was to make sure that whatever happened coming out of the pandemic, there was still a strong competitor to Qantas. So what happened was Deloitte was appointed as the administrator.
Virgin's the biggest casualty so far as COVID-19 wreaks havoc on Australia's locked down economy.
There was a sale process run, and in the end it was US private equity firm Bain Capital that won to rescue Virgin out of administration.
Private equity fund Bain Capital looks set to become the new owner of Virgin Australia after New York hedge fund Cyrus Capital Partners withdrew its offer.
They sacked 3,000 staff and they really bought an airline that had halved the number of aircraft and renegotiated hundreds of contracts to reset its cost base.
And former CEO Jane Herdlicker came on board once Bain took over. How much credit can she take for the turnaround? And why didn't she take the airline all the way to the IPO?
Jane used to work for Bain Company. That's the management consulting arm that's the sister company to Bain Private Equity. And there's a lot of crossover between the two. They know her, she knows them. She was involved in this from the start. Before Virgin collapsed, when Bain Private Equity opened its file, they pretty quickly got her on. She used to work for Jetstar. She knows airlines. She knows Bain. And she was available. She's quite dogged. She's well known in the market. She's got a particular style. And they thought, this is someone who can really be involved in the turnaround with us. It was a bit controversial at the time because Jane can be a divisive character, but she can also be quite effective at what she does. Virgin, as Aisha said, was run by a bloke called Paul Scurrah. It was sort of widely anticipated that he would continue to run Virgin under Bain's ownership. But pretty much as soon as Bain got the keys, they threw them over to Jane and said, do your best.
Yeah, there was always this tension, though, I think, Ant, between Scurrah's plan for the airline, which was to keep it internationally focused, to keep it as a competitor to Qantas on more levels, and what Bain and Herdlicker wanted to do, which was keep this a very low-cost, more domestically focused airline that wasn't flying long-haul international anymore.
So Bain's turnaround under Jane, it was a bit of good management and some good luck. I mean, they used the administration framework and the laws around it to completely reset the airline, get rid of aircrafts, renegotiate contracts, refine the customer proposition, change the routes it flies. Like in meetings with investors in April, it told them it had changed 500 contracts since it first went into administration, which is a huge number, Lisa, and it saved a lot of money. So Bain then has the airline after the pandemic. I mean, the sector was always going to bounce back. It took a while. Remember, the lockdowns lasted through 2020, 2021. They were on and off. But then this revenge travel boomed, right? People were sitting on savings. The floodgates really opened. Airline capacity was lower. And so if you did have a plane with seats on it, prices were up and you were laughing, right? At the same time, Lisa, Qantas, which is undisputably Australia's biggest airline, number one, it's got 2/3 of the domestic market, it shot itself in the foot. Its customers were raging against flight cancellations, COVID credits, lost baggage, all this basic customer service stuff that Qantas either forgot how to do during the pandemic or just wasn't set up to do anymore. Its brand plummeted in the rankings, while Virgin's, which looked a bit more sensible and had its act together, perhaps was easier because it was smaller, it rose up as a result. Now, through it all, Virgin created a new lane for itself and it stayed in it. Jane's an absolute force. She did a good job in firing up the Virgin staff, getting deals done with unions, even locking in Qatar Airways as big shareholders. But the problem is, Lisa, that investors, they were a bit wary of her. She wasn't the one to take it to the IPO. She did a lot of the heavy lifting, a lot of the prep work, got this turnaround on track and sort of helped design it. But she wasn't the one ringing the bell at the ASX on Tuesday. And you have to ask why. And it's just because the investors did push back against her. Bain realised that. So they replaced Jane with another Bain & Company former consultant called Dave Emerson. I mean, he was also been involved in the turnaround for a few years now. And the message that he's been selling to investors is that Virgin has found its lane. It's a third of the domestic aviation market. You've got Qantas above it. You've got Jetstar below it. Virgin's just in the middle, making pretty good, middling sort of margins from everyday business customers and holiday makers. But Lisa, it's a nice little lane to swim in now. The problem is Virgin's been in a nice little lane before, remember? It was the budget carrier. It was doing reasonably well. There's just something about airlines, there's something about aviation executives that avgas can go to their heads, and it's just so tempting for them to go up market, to have business class, flash lounges. It's so tempting for these guys to expand and try and compete with the likes of Qantas. So you have to wonder whether Virgin will be able to stay in its lane long term.
Aisha, we're talking about Virgin Airlines, which floated on the stock exchange on Tuesday after managing an impressive comeback from its collapse during the pandemic. What's the outlook for Virgin? Will it stay in its lane, or do you think, like Ant says, it might try and take on Qantas and at some point upset the state of play in the aviation market?
I think it's very clear that Virgin has told investors that it knows its place. It wants to be the great second airline in Australia, and it's very comfortable doing that. It's a very, very profitable place to be right now. So the outlook right now is helped by a very, very solid domestic aviation industry. Australia is unique in having only 2 airlines at the moment. You know, the Regional Express, it tried to take on Virgin and Qantas on capital city routes and ended up in its own administration process. And we also saw discount airline Bonza that came and tried, also failed within a year. So I think when it comes to staying in your lane, the thing that always happens, and, you know, we can say that it's a market for 2 airlines until we're blue in the face, there will always be a third competitor that comes and goes. You know, whether they last for more than 12 months is another story, but someone will try. And I think at that point, that's when airlines need to decide what is going to be your proposition. And I think that one of the things Virgin has emphasised as a point of growth, as it goes to investors with a growth story, is that the Velocity Frequent Flyer program will grow. Now, growing your frequent flyer program when you don't have a long and big international network like Qantas is quite challenging. Do people want to be part of a frequent flyer network where you can redeem on flights from Melbourne to Sydney or to the Gold Coast versus going to London or flying business class lie flat to New York? Probably not. It's a less attractive proposition. So there will always be the temptation to get back into long haul. The problem is scale. So getting new planes to be able to fly enough to make your network a genuine competitor to Qantas is going to take a long time. You know, right now we're seeing uncertain fuel prices with what's happening in the Middle East. There are a lot of unknowns in the market, and that's always the case with aviation. But I think we can be sure of, you know, kind of 2 things. 1, that a third competitor will spring up. And 2, as Ant says, that at some point they'll get ambitions to grow.
Elisa, Virgin's timed its float quite nicely. I mean, Bain, it did get lucky. It's taken a couple of years of IPO preparations for it to get its ducks in line here and relist the business. But the domestic aviation industry backdrop just sort of got better and better in that time. And if you're buying Virgin shares now, you have to ask, is this as good as it gets for the industry? If so, is Virgin doing anything internally to increase its margins, to be more robust and in a better position should the industry not be as good as it is now in the future? I mean, there's always skepticism buying shares of private equity, and that's healthy. You know, Bain's made truckloads of money already from Virgin. It's probably made 3 or 4 times the amount of money it put into it, and it's still going to own 39% of the listed Virgin. As far as private equity stories go, I'd say this is a good one. You know, it's a financial investor that stepped up in a tough period, took risk, oversaw a sensible turnaround story. But now, of course, it's private equity and it's trying to get some bang for its buck. It's trying to make money, and to do that, it is selling shares to ordinary Australian investors, to super funds, to institutional investors, basically anyone that can. Bain picked this up at the bottom. It's now floating it. Is it floating at the top? If not, where's the top, and what can Virgin do between now and then?
I think that that's a good question, Ant, but they have said like that they still have costs that they can keep on eliminating. They say they're 5 years behind Qantas when it comes to taking some of those transformation challenges around IT, around how they sell tickets, how they do a lot of things. So they see that there is still growth that they can make through just, you know, continuous improvements and incremental kind of revenue and margin improvement that probably isn't there for Qantas.
So, Aisha, then what does all this mean for the consumer and the cost of air travel? You mentioned before fuel prices and the impact that the uncertainty in the Middle East is having. What does it mean for the traveller?
I think what we can see from the Australian domestic market is that having two competitors only in aviation is not great for the consumer. We're in a domestic aviation market where we've seen the price of airfares between Melbourne and Sydney routinely hit over $1,000. We've had periods where loads on planes have been over 90% full, which is historically unheard of. So I think, unfortunately for consumers, this probably isn't going to be a great thing. Those incremental improvements will be passed on to investors. If fuel prices spike, Virgin's hedged for 6 months out. So, the impact for investors will be minimal, but they do pass on the impact of higher fuel prices in fuel surcharges that are charged to consumers. So, as geopolitical tensions ratchet up, you should probably be prepared to pay a little bit more for your airfare.
And the market hasn't had very many big floats in recent years. We've talked a lot about the shrinking of the ASX. What does the Virgin IPO mean for the local stock market?
This is a good news story for the ASX, Lisa. This is Virgin coming home. There is no other owner for it. Airlines globally are either owned by countries themselves or they're listed. So yeah, this is good. It comes for an ASX at the time when it needs more listings. Public markets globally, they are shrinking. The ASX is shrinking. If you look at the number and the value of companies that are coming off the ASX, companies that are being bought by private equity or super funds or sovereign wealth investors or whatever, the value of those companies is much more than what's coming back through IPOs. So this has been a big shift for Australia and for Australians. And Lisa, public markets have been so great for ordinary Australians, for their super fund balances and as direct investors. We're all trying to work out whether private markets, that's private equity and the like, whether they can be so good for ordinary Australians. ASIC's trying to work this out as well. And while it does that, it's tinkering with the listing rules to try and encourage more IPOs. But Lisa, Virgin showed us you can get an IPO done. There are buyers for shares. You just need the right story, the right structure and the right price.
I think this IPO just shows, look at what they've been through. They started these talks with investors before Trump went crazy on tariffs. So, they've come through a monumental period in history to get this to market. It shows the strength of the domestic Australian aviation market.
A final question for both of you then. How will Virgin go from here? And is Australia's domestic aviation sector destined to be a duopoly?
For the foreseeable future, absolutely, Lisa. Australia, I don't think it's just not big enough for a big third player. We've seen others try and fail. Look at Rex recently. Look at Bonza. Australia's even too small sometimes for a second viable airline. We had Virgin go bust. We had Ansett go bust. Yes, they were in wobbly markets, but it just shows you how hard it is to run a decent-sized scale network in Australia, which I think makes it really hard to see a third player coming in and really sticking it to Qantas and Virgin. That means I think we'll be a two-airline town for a while yet. And Lisa, that's actually similar to what Australia's like in a lot of other industries as well. Look at supermarkets. We've got Woolworths and Coles. Look at department stores. It's Myer and David Jones. Look at energy. It's AGL and Origin. Australia is a country of duopolies, and it's hard to see airlines being any different.
I think no matter what we say, whether it's rational or not, there will always be a third airline. I think I disagree with you on this point, Ed. History has shown us that someone will always try to challenge Qantas and Virgin. They see this market as being big enough, but you do need the scale. And I think that means that it will take a little bit of time before we get that third competitor. And, conditions are really ripe for Virgin in the interim. I think the investors' appetite for this IPO has been really strong. And that's a testament to the fact that we know that no big competitor is coming to take these guys on for at least the next few years.
Thanks, Anne. Thanks, Aisha.
Thanks for having us, Lisa.
Thanks, Lisa.
Thank you for listening to The Fin. I'm Lisa Murray, with senior reporter Aisha de Kretzer and Chanticleer columnist Anthony McDonald joining the podcast today. The Fin is produced by Alex Gow, with assistance from Mandy Coulin. Fiona Buffini is head of premium content. Our theme is by Alex Gow. If you like the show and want to hear more, follow us wherever you get your podcasts and consider rating and reviewing us, as it helps others find us. For more stories about markets, business and power, subscribe to The Financial Review at afr.com/subscribe. See you next week.
The Australian Financial Review.